Mellow is a B2C e-commerce marketplace platform that's been built for the global brands within the CBD and wellness community. In terms of the platform itself, it's a multi-merchant, fully managed, curated B2C marketplace, as I mentioned, for global CBD and wellness brands. To date, we've raised 150k angel rounds that was undertaken in December 2019 from existing stakeholders and shareholders. You have a seasoned set or suite of industry experts in James and I. We're the co-founders. We have over 20 years experience of marketplace and international e-commerce. The platform itself has been built and is ready to scale. We have GMV targets of 200,000 to the end of this year, 1.6 million for next calendar year, growing to 4.5 the year after.
The global CBD market offers a substantial opportunity. It stands at just over 4 billion today and looking to grow by 400% in the next 5 years to over 15 billion sterling in the CBD space. The European market is very closely following the trends of the US market, which between 2014 and 2019 grew by over 1,000%. The transactions or GMV in the UK market this year will finish at just over 300 million, and that will be tripling in the next 5 years. Over 1.3 million UK adults have tried and or regularly use CBD, and that's over 11% of the UK population in the last 12 months.
So in terms of the problem that Mellow's solving, the market here in the UK is highly fragmented, it's highly immature. There's a lack of organisation within the sector. The brands themselves aren't organised. They lack brand strategy. There's only a couple that have been relatively successful here from the UK. There's a lack of cohesive knowledge around the space, with customers not really knowing where to go, where to pick up the knowledge to where to buy, how to take, and what they should be taking CBD for.
And off the back of our experience in marketplace over the last 20 years, as Neil mentioned, we've built this model to give us a moat around the industry and a very defendable and scalable suite of USPs. We have a suite of global brands we've onboarded onto the marketplace and sourced to the marketplace to offer the best product offering to UK consumers. We have built out a whole suite of brand-facing services, which include a Fulfilled by Mellow warehouse and fulfillment solution. We have a banking arm attached to the business, as well as an accounting, a VAT and company setup aspect to facilitate that cross-border approach for non-UK brands. We have a financial level KYC process for all brands to ensure that any customer coming to Mellow can have full trust in us as a platform. We have a multi-merchant payout solution on the back end that allows a full scalable flow of funds and cost-effective flow of funds. We have an independent data warehouse that allows us to give insights on the brand and the customer side, as well as a full coherent and tested customer acquisition strategy that will allow us to continue to scale and grow the business.
So in terms of the technology solution that Mellow's built on, we're using a SaaS platform that's specifically built for marketplaces in mind. And we have a broad suite of technology solutions then hanging off that allows us to deep dive into the customers that are on the site, what they're doing on the site and how they're using it and how we can then interact with them. In terms of the brands that are on the site, this is a small cross-section of those that are there in place already. We have 45 brands and about 300 SKUs. We'll come to that in a little bit. More importantly for us, we have an onboarding criteria that we have built around a proprietary algorithm internally that's called the Mellow Trust Score. Not only does this allow customers to rate brands, rate products, but it also allows us to understand as much as we physically can about the brands that we're bringing onto the site. Every single brand and every single SKU of those brands has their COA, Certificate of Authenticity. So they've undertaken independent testing that customers can also then see and read as they shop.
For a number of months spent in the US on the West Coast over the last 3 years, we've built out a comprehensive and nuanced customer acquisition strategy. Paid search is a non-viable channel for CBD and is not allowed by Google, and therefore there's a lot more in a vertical and skill needs to be applied to customer acquisition. The underpinning has been kind of SEO and social, which we've been undertaken since day one of the build of the marketplace. So presently we stand as #1 organic search for multiple key CBD keywords as well as Mellow, and that's a section we'll be building upon in the coming months, years.
In terms of traction, as I mentioned, 45 brands live on the site already, nearly 300 SKUs. We've got month-on-month growth. very high level of repeat purchase, so nearly 30% of customers are coming back just in these first few months and buying again. A dwell time of well over 3 minutes, nearly 4. An industry average conversion rate of over 1%. An average order value of £58, well in excess of the average product price on the site, that's 44.
Now, outside of the financial forecast and the financial model that you'll see, we've built a tiered approach to future revenue streams that we feel are kind of will play a key role in the growth of the marketplace. And these include not only the data warehouse, how we can leverage that data from an industry perspective. We have a crypto and blockchain payments platform we're building for Q1 next year, as well as tapping into the CBD sector for pets, which is over $1 billion industry in the US. From a legal perspective, we work with the #1 UK and European legal firm in the space, and all on-site and off-site communications and documentation being validated by the agency to ensure that we are always at the cutting edge of legislation and regulation in the CBD space. From a financial standpoint, over the next 4 years, we'll be hitting just over 8 million in terms of GMV in the UK market, and that's an EBITDA of 34% and over 2.5 million in terms of profit after tax.
Just to conclude then, asset-light, CapEx-light business model. As we mentioned, highly experienced management team. We've got realistic plans for internationalization as the CBD markets in Europe and broader European, Eastern European countries open up. France, Germany, Spain, Poland. Multiple additional revenue streams that we're looking at to monetize in the coming months and years as well. So paid warehousing, paid brand sponsorship opportunities, paid marketing opportunities. We're already EIS qualified, and this round that we're looking at, as I mentioned earlier on, is under EIS, looking to raise 500 million. 500 million, that'd be nice. 500,000. Excellent path to profitability in the next 3 to 5 years. And obviously at the moment, it's a proven business model looking to be invested in on the ground floor. Thank you very much.
You finished bang on 7 minutes. That was slick. Well done. So I'm waiting for questions to come in, but I'm going to start off with 2 common questions we've had is what's your total funding till exit and what would your ideal investor look like?
I missed the first bit, but ideal investor at the moment, obviously this is an EIS round, so we're looking at high net worth family offices and angel investors that are looking to get in on a very high growth opportunity. We're then looking at a pre-seed round end of Q1 next year, obviously at a higher valuation and a higher amount.
And how much money do you think you're looking for? Because there's a feeling from the floor that 500,000 might not be enough money.
500,000 gets us through to Q2 next year, and if we touch on use of funds, that really allows us to hire a chief technology officer who we've got lined up already, a marketing director and a head of onboarding, and gives us the marketing runway to get us through Q4 and the early part of next year. And as I mentioned, we'll then be looking to go into a pre-seed or a seed round, depending on how we then call it. We'll be looking at 1.5 million, potentially on a valuation of 6 or 7.
So you might just want to pause for 5 seconds before you answer this one, but if you had to do your USP in a single sentence that's going to make you successful, what is it?
I'm definitely going to hand this over to James.
We have worked for 20 years in the onboarding and strategic development of global marketplaces and have a detailed, intricate knowledge of how to kind of run, manage and grow a marketplace independent of the sector.
Excellent. And do you have any aspirations to launch your own brands, or are you going to stay as an aggregator in the middle? I mean, Amazon does that all the time, don't they, with Amazon Basics?
Yeah, interesting question. We're looking at it, and it's kind of out there as a question that we haven't yet answered. We've got the necessary knowledge within the industry that we can do that. We've got, I would say, peripheral stakeholders that have been in the beauty, cosmetics and wellness space for some time. We understand what the formulations might be. We understand the particular subcategory that we would go for, which would probably be beauty and face and hair care, so grooming, and might then look to go down the route of men's products, potentially women's as well. But we've discussed it, but obviously it would need significant investment to set that up.
And are you focusing on the UK or non-UK markets?
At the moment, UK. We would look to become market dominant in the UK before we then launch into other European countries. In particular, we're looking at Spain, Germany, Portugal, Eastern Europe, potentially France. France has a slightly less transparent market around CBD.
So that's a very heavy European focus, which is completely fine. But who are the competitors in the UK that you're chasing, and where do you sit relative to those competitors at the moment? Are you number one, or are you some way down hoping to become number one?
There are competitors out there. In terms of a marketplace model, we believe we're the only one that is a true marketplace in the sense of, a two-sided platform with network effects. There are multi-channel retailers out there that have e-commerce plays. So there's the Chillery that seems to push itself more towards the kind of female wellness market, and there is the drugstore, which is predominantly a bricks and mortar store, also has an e-commerce site. Just shut down one of their stores, so difficult market for them to be in at the moment. There's also an affiliate site called Alpha Green that we know very well that are trying to pivot towards a marketplace model at the moment. So I think we're kind of the other way around in that we've started a marketplace. We intimately and intricately understand marketplaces, have both scaled and exited marketplaces ourselves, and have run a marketplace-specific agency together for the last 7 years as well. So we kind of know where we're at, we know where we're heading, we know the kind of true path of the business model. So we're aware that there are competitors in the space, absolutely.
So with that level of confidence, I'm going to say, what is the one risk that's going to keep you up at night? That's a very pregnant pause.
I mean, no, I'm not trying to sit down. I would say outside of the UK on a European level is potential changing regulation in the space, and it'd be remiss not to mention, what happens if Amazon comes knocking on the door one day and decides to sell CBD as a potential channel to market, which could be a pretty strong competitor. We have, however, studied and have worked with bespoke or product vertical marketplaces that are very successful across Europe. For example, Shoes in France, which is a shoe and trainer marketplace that turns over 180 million pounds annually in GMV, and competes very strongly against Amazon by offering a much more curated and content-led strategy to market. So it would just mean that we have to be fully aware, and what we've done from day one is to start as if Amazon might come in 3 years' time. What do we need to do today to ensure that we are in a position to be bought by Amazon or compete against Amazon in 3 years' time?
I think that's the exit strategy for us. It's some of the bigger umbrella portfolio companies out of the US or Canada, World High Life, Columbia Care, Canopy, some of these guys that are looking at the UK as a beachhead into Europe. How do we get into these markets? Let's buy a small, albeit successful incumbent. I think that's probably where we're likely.
That's what you're describing as your exit being bought out as somebody else's beachhead.
I would imagine so. May not be, but I would imagine so.
Okay. And if somebody was to say, is this not just a fad?
I would say they haven't done their research. I think following trends in the US, looking at the product vertical as it's grown, it's looking to be as ubiquitous as caffeine in the UK within 4 years, and larger than the vitamin C market across Europe already. And I think it's definitely a trend. There's been a trend, and even kind of tapping into COVID as a global trend, this move away from non-pharma as a health and wellness.
So if it's going to be as big as caffeine, I'm surprised you've not said Starbucks might be interested in
possibly
out and acquiring you.
You can get CBD added to your coffee in Starbucks in the US.
I didn't know that. And your whole model is built upon the concept of acquiring subscribers. How much does it cost you at the moment to onboard and acquire your subscribers? That's got to be one of your biggest costs.
Well, there's two ways to look at it. It costs just today as a blended average costs £19.6 to acquire a customer. We've built the financial model in two ways: it's cost per acquisition down, and also conversion rate and up. And it really depends on the channel in terms of the efficiency. We've definitely found that organic SEO, and we see that as in inverted commas, a paid channel, because a lot of effort and time has gone into that, drives the most credible customers in terms of lifetime value and repeat purchase. Kind of pivoting towards, we have a strong display campaign that offers less coherency in terms of customers and customer loyalty to the site. But each channel has their own metrics that are the financial model.
The good news is it's time for me to tell you to shut up so you can sit down and relax.
We love talking anytime. Can't stop.
You might be able to think of something you could do to make yourself feel slightly more relaxed.